Hi, hello friends. Welcome everyone to Super 25, India's largest retail traders online conference. I'm Ashok Devanampriya, the CEO of Traders Gurukul and also the host for your today's program. It's a great pleasure to invite every one of you to Super 25 Edition 3. Before we kick off the presentation, I would like to appreciate our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website. And also, I would like to thank our title sponsor Espresso from the family of 𝐏𝐫𝐞𝐧𝐿, one of the leading stockbrokers in India with millions of investors as their customers. The speaker for today is my good friend Gunjan Dua from Australia. He is going to empower us today with his special topic using price for trend identification. Gunjan is an options trader based out of Melbourne in Australia. He started trading at the age of 21. After the fall of 2008, he tried almost 5,000 times to achieve some success in the markets. He has been a constant trading enthusiast. He holds a CMT and a CFTE. He holds an MBA degree in finance from the La Trobe University in Melbourne. He was a contributor for Traders Planet. He was serving as a board member of ATMA, Association of Technical Market Analysts in India. He is a co-founder of a Melbourne-based hedge fund by name Euler Capital, and also he runs a quant fund by name Multiplayer in Noida. Gunjan, on behalf of Traders Gurukul, Money Control Pro, Espresso, I extend my warm welcome to you into this program. Go ahead, sir. The stage is yours.
Thanks, Ashok. Thank you for inviting me here. This is my second time in the Super 25. I have been, last year I was one of the speakers, and it is an honor to be here again. And I welcome all the attendees who have come here out of their busy schedule uh, to attend this. And I hope I can add some value to your overall trading process. I think that's why we are here. All of us are traders, and maybe some of you are wannabe traders, and some of you are professional in what you do. So once again, thank you, Ashok, Traders Gurukul, Money Control Pro, Espresso, and all the other sponsors for inviting me. And I'll begin this. Hopefully, it's maybe will take. It's not a very long session. Maybe an hour, hour and a half, maybe two. We'll see. You can ask me questions in between, or can leave. It will be better, I think, if you can note down any questions you have, and then we can have a Q&A session at the end, and then you can ask me that if any. Um, Afterwards as well, I'm available on Twitter by my name. You can search me on Twitter, and if you have any question later on as well, I'll be happy to answer. So I'll start. So the topic for today is using price for trend identification. As Ashok mentioned, I've been trading for a long time now. I have been trained by myself, and in the process, I've tried a lot of things here and there. But price is what using now for the past 5 6 years now. I've been using price mainly for taking my trading decisions. Uh, Two things here. It's a very large subject, so it will be hard for me to explain everything in detail, which is not possible in a 1.5 2 hour event. However, this might open a gateway for you to do further research and ask some questions to me, and as I told you, I'll be more than happy to answer all your queries. That doesn't mean that I don't use anything else, but I use price mainly, and then things, other layers on layers, a few more layers to improve my probability and improve my decision making and execution. Uh, but overall, if some of you know me or some of you follow me, you might have seen my charts. I don't use a lot of other things as well, which doesn't mean you don't have to. you can, but maybe this one will give you another edge of understanding markets using, so today's topic, using price for trend identification. So we'll start. Uh, so about myself, a little bit. Ashok has already told you a lot of things about me. Um, uh, I've been trading for a long for since 2002 actually, but professionally from after 2008. Been managing a hedge fund in Melbourne, Australia, uh, by the name of 𝐏𝐫𝐢𝐜𝐴. I did my MBA and MFA from there. Before that, I did my CMT and CFTE. And so it's a quant-based fund, and we manage India portfolio by a fund by the name of the Multiplier here in India, and the global assets, be it commodities, equities, or volatility products from Australia. So this is, I do these things. I mean, I do trade almost every day. I'm not an intraday trader. I'm more a positional kind of a trader, mainly because, yeah, my work doesn't allow me to take short-term trades, because the markets that I trade, mainly NYMEX or CME, they are 24-hour markets. So and that it is what suits me. But the things that you will learn today, or what I will share today, um, some of those things you might be knowing, some of those things might be new for you, but they can be used on a different time frames. So it is, if you're either you are investor or a trader or anything, whatever you are, you can use those in your overall analysis. So that's about me. So we'll move forward. So we'll start with, what is a trend? It's a very common uh, question, or it's a common theme, because as as traders, this is what we want to. That's what our goal is, to find the trend in a way. I think the main goal of a trader is risk management and position sizing, to manage that. But for decision making purposes, we want to know what a trend is. So let's do the definitions, and then we'll move forward from there. If by any chance I'm going a little fast, or if you can't understand anything, you can unmute yourself and ask me. I'll try to answer that. The medium of this today's session will be English. I won't be, because I don't know what your native language is, but I assume almost everyone understands English. So all of this will be in English. However, if there's any question that you need to ask in Hindi, I'll answer that in Hindi. But the overall, all this whole event is, I mean, this my part is in English. So we'll start. So the question is, what is trend? I'll read the definition, and then we'll discuss. A trend is an overall direction of a market or an asset's price. So direction of a price of that asset, be it volatility, be it crude oil, be it Nifty, be it Bank Nifty, anything. So direction of that asset, which side it is going. In technical analysis, trends are identified by trend lines or price action that highlight when the price is making higher swing highs and higher swing lows for an uptrend, or lower swing lows and lower swing highs for a downtrend. Many of you might know about Dow theory, which talks about higher highs and higher lows and lower highs, which is the main assumptions behind what Dow theory is all about, by Charles Dow. We can use trend lines. A lot of people use trend lines to understand. But what the aim of that whole exercise is to understand trend. Normally, on a chart, just by a glance, without looking at using any indicators or trend lines or moving averages, roughly we can say whether it is in a downtrend or an uptrend. If you see a Nifty chart these days, be it a 15-minute or an hourly or a daily chart as well, you'll see that it's in a downtrend. You don't have to put any oscillators or any indicators to know that. But when it comes to understanding where to execute, when to execute, when to exit, when to enter, where to make a high probability trade, and where to exit from that trade. So all of these things, we need tools. If you just want to see where Nifty is, then you don't need anything. But we are all traders. We need to make, some of you make decisions on a minute bar, some of you make decisions on a 20-minute bar, maybe on a hourly, maybe 4 hourly, daily, weekly. For that, we need these indicators. So for that, that is what trend for us is all about. It's not just about highs or lows. It's about where we can execute, where we can take high probability trades uh, and improve our equity curve or make money out of it. Second paragraph, trend analysis tries to predict a trend. Predict, we are in a game of prediction, such as a bull market run, and ride that trend until data suggests a trend reversal, such as a bull to bear market. So that is what I said previously, that if you just want to see a chart, and I mean, just by a glance, you can see it's an uptrend or downtrend, but you want to ride that trend until the data suggests a trend reversal, and we want to make use of that reversal to take a opposite trade as well, or to close our. So if Nifty is going from a short-term downtrend to a short-term uptrend, or vice versa, we not only, if we are short in a downtrend, we want to cover our shorts and go long with a stop loss or something like that. So this is what our main aim of finding a trend is. Trend analysis is helpful because moving with trends and not against trend leads to profit for an investor. So if you are long since, say for example 17,000 and Nifty is nearly at 16,000, that is, you were against the trend. But if you were short from 17,000 and booked somewhere around this range, so you were with the trend. So our aim is to be with the trend, because that is where more the money will be made versus money will be lost. It is based on the idea that what has happened in the past given traders an idea of what will happen in the future. And this is an assumption of technical analysis as well. So in technical analysis, the main assumption is that the past patterns uh, repeat themselves. So that doesn't mean they will repeat in the same fashion, but this is an assumption. For any model, for any study, we have to have an assumption, be it fundamental analysis, technical analysis, quantitative analysis. If you are making any model, or if you are doing any study, or if you are even if you are valuing a balance sheet, there are specific assumptions that you need to make for a decision. So, for example, in technical analysis, there are head and shoulder pattern, or a triangle, or a cup and handle. Assumption is that cup and handle, for example, has worked in the past for many other stocks. We are assuming that will work for this stock as well that you are analyzing. If you are assuming a support and a resistance, which will come up in the next slide, we will assume that because that support held in the past, it will also, will might hold this time as well. One day it will break anyway, but when we take a trade, we make an assumption. So the past gives traders an idea of what will happen in the future. So there are three types of trend: short, intermediate, and long term. But trend can also be measured as, you can look at there are short term trends, there are intermediate